Alright, I'm looking at SPY and it seems like it's on a nice run up now, so I'm looking for a call. Looking at the 0DT options. Let's see, I only have, 130 in the account, so I can get a 589 call. Looking at the Greeks on that, 801, so time decay is kind of high, and delta's decent. More people in the put, but I think this is about to go up, to be honest. Whoops, there we go. Let me look at the 5-day trajectory. Oh yeah, look, we got on the 5-day, 10 days moving average about to cross the 50. Yellow, blue about to cross yellow, so that's good. That means calls are looking good. On the 5-minute, check this out, we got blue just about to cross yellow. Yellow isn't really pointed down, I would say. It's like, it's starting to curve up a hair, so like right here it was pointing down. But right here it looks like it's starting to curl up. So we got yellow curling up, blue curving up towards yellow. I'm just basically waiting for blue to cross yellow. Then I'm going to jump in the call. It's at 120 right now. I'm just going to get in for market price. I'm not going to sit there trying to chase it, you know, on a quick little 0DT day trade. So I'm just simply waiting for blue to cross yellow. And the reason why is because there are times when blue looks like it's going to cross yellow. Like, look right here. If I would have just only seen this much of the screen and I would have said, well, blue's heading towards yellow, and I would have got in here, look what happened. Found resistance at yellow, found resistance at the 50-day and went back down. So I need to see blue actually cross yellow. However, this looks so good, you could probably get in now, but let me be a little bit more cautious, wait for blue to actually cross yellow. As soon as the 10-day actually crosses the 50-day, then I'll get into the call to the upside. So I just need to be patient for a minute here. Okay, now we got 10-day actually crossing 50-day to the upside, as you can see. So that's when it's an indication to get in. I'm gonna jump in a call at market order just to get filled at whatever. There we go, I'm filled. I'm gonna stay on the same screen looking at the option chart and the way I'm gonna play it. This is a call, so I make money as the price goes up. So if the price goes down below the blue line, the 10-day moving average, we get below the 10-day, I'm going to get out for a loss to the downside, and then for a take profit to the upside, I'm just going to get out when the trade starts to either slow down and consolidate, just trade sideways, or if it starts to shrink back down, then I would get out. So now it's just a matter of kind of eyeballing it. There's really like no alerts or anything that I can set, I don't think, on this option chart. So with this strategy where you're trading the actual option chart itself and not the SPY chart, it is a little different. But yeah, stop loss, 10-day moving average, take profit, either resistance, consolidation, or a squeeze back down. So right now I'm just chilling. You can see right here in the blue, I'm in one contract for $111, and the mid price is right here in the middle, 108. So currently down a little bit, so no big deal. Like I said, as long as the candle doesn't close below the 10-day moving average, then trade's still on. So just to get ready to sell, though, I'm gonna go to sell and go to market order and have that ready, contract 1. So now I just click the red sell button on the bottom and bam, I'm automatically out of the trade for the closest fill that I can get. So there might be a little slippage, like it might lose a couple bucks or something compared to putting in a limit order, but the benefit is market order, I can get straight out in a hurry, whereas with limit order I just have to keep trying over and over and keep missing getting filled until I finally get filled. This way I can get out in a hurry. All I do is smash this one red button on the bottom and I'm out. Be ready to pitch. Alright, so there you go. Got a red candle closed below the 10, so I have to get out immediately, which sucks because that's a loss, but I'm not going to sit in this any longer. That's not part of the plan. The plan is if a candle closes below blue, below the 10-day, I get out, and it closed pretty decently below the 10-day, so there's that. See what the damage is. Yep, that sucks. Lost 24%, $32 back to 101, so it is what it is. But like I said, I'm just kind of experimenting with this strategy, so I'm not really disappointed if it doesn't play out. I've never tried this strategy before, so I'm gonna just keep doing this exact strategy unless I fall under 100. We'll see what happens.